I will argue what happened here, it's a long answer to your question, is this is just another step in what I believe has been a very systematic and very targeted attempt to cut off the banking or fiat on-ramps and off-ramps into and out of crypto. And unfortunately, Silicon Valley Bank kind of got caught in the crossfire and ended up having a bank run fomented by a couple of venture capitalists who put out Slack messages telling everybody to take their money out. Look, if everyone takes their money out of a bank, banks go away, right? That we've all seen the movie It's a Wonderful Life. The money's not sitting in the vault; it gets lent out. And I think the difference this time, Paul, is no one really thought, which is kind of funny, what's the difference between an old-fashioned bank run? We've all seen the picture of the men and ladies in their hats and ties and umbrellas running for the Knickerbocker Trust, where you're physically running and you got to wait in line to get your money, versus I punch a couple buttons on my app and the money's out. I mean, $42 billion in an afternoon on 2 Fridays ago from Silicon Valley Bank. That's game over. So I think we're not in a global financial crisis. I think we're in a little bit of a localized panic. Again, I will probably argue that this is intentional by the big banks, right? What we saw was $120 billion leave the little banks and go into the top 5. Some might argue they needed that for their solvency ratios and all that good stuff. And concentration of power at the top is the hallmark of all mature kleptocracies or cronyism societies. And you see that in, the number of banks at the top, the number of airlines at the top, the number of, name an industry, it's all consolidated. And that creates this massive wealth and income inequality that we see every day.
An eventful march of bank failures and ongoing inflationary and other macroeconomic headwinds left investors mulling where to place their trust and cash, and ultimately proved favorable for Bitcoin and other cryptos considered stores of value impervious to turmoil. Hello and welcome to Money Talks. In today's video, Mark Yusko updates us about the current banking crisis and his outlook for Bitcoin adoption in 2023.
Look, I agree completely that the move toward consolidation and this move, again, that I believe is intentional to foment fear in the banking system is 100% designed to create a window of opportunity where people say, I'm afraid of banking systems. Yeah, I'll put my money with the Fed. I'll buy this CBDC, which, to me is the most dystopian form of pure evil imaginable, where, the government can control how often you spend your money, how much your money's worth, where you can spend your money. I mean, the two craziest scenarios are, you get your paycheck on Friday and have a couple cocktails and drunk texts about the president. You wake up the next day and your money's worth 85 cents on the dollar. That would be crazy, but it could happen. Or worse, Walmart pays the government a little something, something, so your money doesn't work at Target. It only works at Walmart. I mean, that could never happen. Sure it could. With a CBDC, it could absolutely happen. So 6 banks, probably a little bit aggressive. I mean, we basically have we have kind of 5 today that matter. But I don't think they can get rid of all the regional banks before then. But I do think that, the Fed trial balloon at the CBDC goes live. I think they're calling it Fed Now in July. I think that's a precursor. And to answer your question on rate cuts, effectively, the Fed is back to expanding the money supply. Everyone says, well, it's not exactly the same. They just, extended loans and and bought back the bonds at par. Yeah, fine. The bonds already existed, but at the end of the day, you're continuing to expand the balance sheet of the Fed, which puts money back in the banks, and in theory, then the banks can increase the velocity.
Bitcoin, BTC, was recently trading at around $28,500, up over 21% in March. At one point Wednesday, the largest cryptocurrency by market value broke the $29,100 mark to reach its highest mark since June 2022. BTC has widely outperformed the S&P 500, NASDAQ, and other traditional assets. The tech-focused NASDAQ rose over 4% for the month. The macro landscape has been extremely constructive for alternative money in March. Greg Magadini, director of derivatives at crypto analytics firm Amber Data, told CoinDesk in an email, adding that both BTC and gold, traditionally viewed as safe haven assets, had seen explosive upside volatility this month. Magadini wrote that recent BTC's volatility in the options market following the implosion of crypto-friendly Silvergate and Silicon Valley banks differed significantly from the more dramatic shifts following the collapse of exchange FTX and other crypto calamities last year. BTC is exploding higher, he said. This rush into alternative money, BTC and gold, shows some panic around purely holding USD.
So my sarcasm there is, I've been saying hashtag probably a fad since 2017, that every time something big happens, whether it's some tech company adopting blockchain technology or some financial services company adopting blockchain technology, or Fidelity allowing their customers to hold Bitcoin, or NASDAQ deciding they're going to let people trade, or Citadel, buying a company to help you trade. Those are, the people who are in the know would say, oh, it's just a fad. And I do this presentation, Paul, that I go throughout history, and a couple things happen routinely. People, first, they ignore you, right? When you're a disruptive innovator, you just get ignored. They're like, yeah, that'll never work, right? The automobile, that's a pipe dream. People want a faster horse. That's what Henry Ford's lawyer told him. They don't want an automobile. They want a faster horse. No, they want an automobile. Horseless carriage. And, when the telegraph was stringing up wires all across the United States, people said, that'll never work, transferring information across copper wires. And the venture capital investors that put in the first 10 grand made 11,000% returns. It's pretty good. But then when Alexander Graham Bell came along and said, we're gonna put telephone voice signals over wires. He goes, that could never happen. Can't be done. So first they ignore it. Then they laugh at you. Literally, the head of the British telecommunications service said, the Americans may have need of a telephone, but we do not. We have plenty of messenger boys. So no, messenger boys are less efficient, or messenger, pigeons for that matter. So, but my favorite was ADP, automated data processing, which is not even like the greatest company in the world. I mean, it's a good company, good solid company. It's actually outperformed the S&P by 3 times over its life. So I'm not saying it's not a good company, but it's not like a Microsoft or an Intel or a great company. But the head of Prentice Hall, right, the book manufacturer, said, I've traveled the length and breadth of this great country and talked to all of the finest people, and they assure me that data processing is a fad that won't last the year in 1958. So, yeah, it's more than a fad. In fact, when something's labeled a fad, you should buy it with both hands and buy as much as you can. The only thing better than a fad is when someone says it rots your brain, right? Video game.
Okay.
It'll rot your brain. You should buy video game. Television. It'll rot your brain. Yeah, you should buy television. So anything that, the internet, it'll rot your brain. Yeah, you should buy the internet, right? If you want to be a truly great investor. you really have to take a perspective that it's okay to be ridiculed. It's okay to be shunned. It's okay to be laughed at. It's okay to be
For sure.
out there where it's cold and lonely. And now the danger of that is you have to be, independent and right. If you're independent and wrong, right, you literally pick the wrong horse or the wrong fad, that can be painful. But if you're independent in terms of thinking and right, that's where the great fortunes are made.
So, what are your thoughts about Mark Yusko's outlook on Bitcoin adoption? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.